Hello YouTube, welcome back to Patrick Boyle on Finance. So in today's video we're going to talk about what the most famous investors are doing in this current environment during the COVID-19 lockdown. We're going to see how they're investing or what they're doing, if anything at all. In particular, we're going to talk about Warren Buffett, Leon Cooperman and Carl Icahn. And if you stay tuned to the end of the video, I'll tell you which books about Warren Buffett I think are the best, and I've pretty much read all of them. Okay, so as of the time of recording this video, the S&P 500 is down about 11% year to date, and it's rallying at the moment today. It's actually off its lows. It was about 30% lower in March, and so it's rallied quite a bit. And one of the questions you might have is, what are the great investors doing in this current market environment? In particular, in this video, I'm going to focus on Warren Buffett. And the reason I'm doing that is just because he did particularly well during the sell-off of 2008, during the credit crunch. He invested in Goldman Sachs and Bank of America, and in many ways those buys kind of signaled the bottom of the market back then. And so I'm going to talk about that today, and then the other reason I'm even talking about Warren Buffett in today's video is quite simply that this Friday he's releasing his earnings report for Berkshire Hathaway, and so that's when we'll get to see what he's been doing over the last quarter. And then there's also the annual meeting, the Berkshire Hathaway annual meeting, which is often referred to as the Woodstock for capitalists. Of course, that makes capitalists sound a lot more boring than they necessarily are, but that big event is happening this weekend. But of course it's not a big event because it's being done online because of the lockdown. So I think Charlie Munger isn't even going to be in the online video broadcast. It's just going to be Warren Buffett and the guy, I can't think of his name, who heads up the reinsurance business with him. So anyhow, I'm going to do a follow-up video once that information comes out, probably on Friday or Saturday. And so if you hit the subscribe button and hit the little bell notification, you'll see as soon as that video comes out, and you'll be able to watch it. So usually big market declines give investors an opportunity to buy stocks at a discount. And in fact, there's a lot of investors who almost over the last decade have been kind of waiting around for the opportunity to buy at a discount because the market has just gone up and up since 2009. And as I mentioned earlier, Buffett bought Goldman Sachs and Bank of America near the lows in 2008. And so it's of great interest to a lot of investors what he's doing right now. Interestingly enough, he hasn't said anything, but Charlie Munger came out earlier this month and said that he and Buffett are being more conservative this time around. So they're not really piling in like they did the last time. And so the exact quote is, he said, "We are like the captain of a ship when the worst typhoon that's ever happened comes. We just want to get through the typhoon, and we'd rather come out of it with a whole lot of liquidity." Now, when he says liquidity there, I think he's moved away from the captain of a ship thing, because captains of ships like to avoid having a whole lot of liquidity. But essentially what he's saying is that they think this is more of an issue, what's happening in the market now, than what happened during the credit crunch about 12 years ago. And it implies, or it's pretty much a statement, that they are holding onto their cash reserves. Now, there's a famous line of Warren Buffett's. He's known for the quote, to be fearful when the market is greedy, and to be greedy when the market is fearful. So the question is the market actually still greedy at the moment? Is the fact that the market has rallied so much off of its lows a sign that people are not fearful, even though there's bad things happening in the economy, and that greed still reigns? Well, we'll hear more from Warren Buffett in the next few days. During the recession in 2008, Buffett's huge investments in the financial sector in particular acted as a bit of a turning point for the stock market, and that decision sort of sent a signal to investors saying that the worst is over. So it'll be interesting to see what he has to say this Friday. You know, he talks about buying quality companies when they are on sale, and there are a lot of quality companies on sale right now. But that's really just half of the equation, right? The price is down, but equally the earnings are likely down as well. And in fact, the earnings part of the PE ratio equation is really just a huge question mark right now. So it's very difficult to say whether stocks are cheap because we just have no idea how bad earnings will be. Now, it's worth also noting that Warren Buffett, through Berkshire Hathaway, owns a lot of companies. He owns a lot of brick and mortar stores. And so it's possible that he actually has a very good insight into how people are shopping right now. And interestingly enough, I have a friend who owns a chain of stores in London, who has told me that actually the online is so busy, he's never seen it like this before. And so interestingly enough, even with all of the physical locations shut down, business is reasonably good, at least in that sort of retail sector. But the question is, how is the rest of the economy doing? Now, the economy has essentially ground to a halt over the last month or two. Unemployment is at all-time highs, and a lot of people agree that the coronavirus or COVID-19 will cause shutdowns that may last long into the future. And when we look at what's happening in China right now, where they've sort of come out of the unlock, you're not seeing people going back to restaurants and sort of busy places, because although you may no longer be legally obliged to stay at home, people are nervous about going out to crowded places. So today's situation, is it different to how it was 12 years ago? Now, the problem is that a lot of people will act like they sort of always know the right thing, and they'll say, well, yes, it's totally different now, or it's not different now. But you have to remember, back in 2008, a lot of the investors that I spoke to were absolutely panicked. And even when the market was at its low, there were a lot of people saying it could half again, and that's always the case. Whenever a market has fallen a lot, it usually is because there's bad news, and there's always an awful lot of people who are still worried that there's more bad news possibly to come. Berkshire Hathaway has about $128 billion in cash right now. So Warren has kept a lot of money on the sidelines ready to invest. So I guess the big question is, when will he do that? Like, what will the signal to Warren Buffett be that it's now safe to pile into stocks? Because Warren Buffett does like to be long the stock market. He doesn't advocate a very conservative position with a lot of bonds and cash. And so the quarterly results will be when we find out whether any of that cash has been put to use or not. Now, the other two investors I'm going to talk about are Cooperman and Carl Icahn, both who have spoken on the news recently. This Thursday, Cooperman of Omega Advisors, I think he's worth a little over $3 billion. Omega Advisors is now a family office. And he came out saying that the government support to companies struggling during this environment, he firstly said that governments should support companies, but equally he pointed out that the government support will change capitalism forever. The idea basically being that once the government owns large stakes in these companies, the CEOs can't necessarily manage them the way they want to or they have in the past. And this might, governments might restrict the ability to pay dividends, the ability to do stock buybacks, or really sort of any aggressive moves that a company might make. And so this could change the growth picture going forward. Cooperman also argued that taxes would go up regardless of the election results in the United States. And he basically just said that, when the government spends this much money, they need to recuperate it somehow, and that is through taxes. And he said it'll be the same whether it's a Republican or a Democrat that gets voted in. His line was, when the government is called upon to protect you on the downside, they've every right to regulate you on the upside. So capitalism has changed. And so he's arguing that the recovery will be slow, that the COVID-19 lockdown could last another month or so, and that we won't be hitting new highs anytime soon. And so if we're 11% down on the year, maybe that's not enough if that is your belief. Finally, we get to Carl Icahn, who, once again, a very interesting guy. guy, an amazing investor, and he is not buying stocks right now, he said in the press. In fact, he's been shorting commercial real estate, and he's been doing that, I think, for over a year. He argues that it's time to be extremely careful. He says that the environment is too unpredictable for the market to trade at 17 times earnings. So essentially, the market needs to get cheaper in order to take into account the unpredictability that we're seeing right now. I did a video about a week ago on oil prices when oil turned negative. I can link to that below if you're interested. Interestingly enough, one of the people who was buying oil at that point in time when everyone else was panicking was Carl Icahn. Apparently he bought between 1 and 2 million barrels of oil. He had the facility to store them in Texas, and so he was able to buy oil at a negative price, an opportunity that he says will never come up again. Icahn has, as I mentioned earlier, a massive bet against malls that he's had for a while. The press refers to it as his mall short, and he's doing that through commercial mortgage-backed securities. And so Icahn is probably doing quite well in this environment. Do comment below as to whether you'd like to see a video after Berkshire Hathaway announced their returns, and even one on the big meeting, which won't be a big meeting this year because of the coronavirus. I've put a link in the description below, as I mentioned earlier, of the best books in my opinion on Warren Buffett. The book that I think is the best is written by Roger Lowenstein, and in fact I recommend all of his books, and I'll give you an Amazon link below. Do subscribe and hit the little bell icon, and that way you'll be notified when the follow-up videos to this one come out. See you guys later. Have a great week. Bye.